Hello everyone, welcome to the breakdown on EU. Before we start the breakdown, let me address a few things. So we all know that as ICT or CRT traders, we've got three objectives. First of all, to determine high time frame drawn liquidity. Second of all, to build a narrative. And third, to position ourselves towards the high time frame drawn liquidity, which we do in the form of taking a trade after a CRT is purged. Now, determining a drawn liquidity is pretty simple, right? You just have to find the correct dealing range matched with the correct key levels and range dynamics, right? Inside a suitable seasonal tendency, right? And then you either choose a high or a low depending upon the framework that you've built, and then that's your high time frame drawn liquidity, right? Obviously, as I've taught you, there are two types of drawn liquidity: short term and long term, and both follow basically the same sequence but different variables, right? Now, till now, I've been teaching you mostly about how to determine drawn liquidity, right, in these past levels of CPI. And what I'll also make sure is that I'll make sure to produce a separate weekly chapter on this topic as well, and which I'll be showing you a step-by-step approach on how to actually properly determine a drawn liquidity step by step and what are the time frames that we're going to use, right? There's going to be a weekly separate chapter about it, and either level 4 or level 5, right? So that problem for you is solved, and some of you are already pretty familiar with it, right? So that's not a problem for you. You don't have to worry about that. The third part, which is taking entries, is also fairly easy and simple, right? I've shown you how to take different types of entry based on different models, right? I've shared my personal model with you, which is the model one entry, which is basically an order block entry, and that's the one I pretty much use myself all the time, right? But also along with that, I'll also share some other entry models too in level 4, on which you can perform WPRs and then assess and gauge whether it's good for you or not, or whether it suits you or not, right? So these two problems or hurdles are solved for you, right? You don't have to worry about it. Now the point that I'm trying to make is that the thing that most people struggle with, and the most predominant and common problem for most of you is, and that's holding you back, is the second part, which is building narrative, right? Building narrative is the hardest part out of all of these three objectives, because first of all, you guys aren't that familiar with it, and second, there are a lot of variables involved which produces conflicting signals and ideas. And for building a sharp and clear narrative, you need to have good anticipatory skills to be able to build proper and correct narrative, right? Now I'll be making a separate chapter on building narrative too, but in this video, let me give you a brief summary here, right, on what narrative is and what it actually means to build a narrative, and what are the factors that you're going to look at, right? That is going to make sure that you determine or build narrative accurately and precisely. So basically, narrative is the idea of knowing how and in what fashion is price gonna go towards the higher time frame drawn liquidity, right? It also means when is price gonna go towards the higher time frame drawn liquidity, or when is it gonna reach there, right? Knowing how price is gonna go and reach there, and knowing when price is going to and reach there, that's basically called narrative. That's basically called narrative, right? Basically knowing the how and when aspect of price, right? Because you can be right about the drawn liquidity, but you still can struggle with accurate entries because you don't know how and in what fashion or particular order is price going to go there, right? Which is an important aspect to be familiar with, and without it you'd be lost in the price action and you'd be clueless. And that's where narrative comes in, right? Narrative, just as the name suggests, will give you signals about which market profile will price emerge in, and what CRT and key levels will price use as a catalyst for expansions or reversals, right? Basically the how and when aspect of price, and that's what narrative tells you about. Now if you're wondering how you're going to determine that and what are the concepts that are going to be used, then for building narrative we use the following concept, right? First of all, the most important one for building narrative is the open high low close, or the open low high close concept, right? The second one is the market profiles. Then we've got weekly and intraday profiles, the power of three, dealing ranges or PDRM metrics, And then last but not least, we're going to use all of them together in a logical framework and match it with a key level and a higher time frame CRT, right? And we're going to make sure that we match it correctly with the CRT. For example, let's say the drawn liquidity is higher and you're looking for bullish or long trades, right? And let's say the daily candle just opened. Now, if you've learned all of these concepts from me and you know how each of them works, then you know that when the daily candle opens, you don't just start looking for a model one entry straight away, because that would be pattern trading, right? And it won't end up working for you. But instead, what you're gonna do and what you would do is, first of all, wait for the Asian session to end, right? Now you know that, and you'd wait for it to end because you know that for that particular time window of the day and that part of the day, price commonly forms a ranging profile or an accumulation profile, right? And at that time, liquidity is being generated, so it's not preferably good for you to take an entry there or look for a model one entry there or choose a CRT there, because you'd lose. You'd never want to take part when liquidity is being engineered, right? So for the first half of the day during Asian session or in CBDR range, you're going to avoid trading. That's what we call narrative. And we know that because of the open high low close concept. Because of that particular concept, we know that after a candle opens, price straight away, most of the time, right? More often than not, it begins arranging profile to generate liquidity, because that's the first sequence of a candle. It doesn't matter if it's a 4 hour candle, a daily candle, weekly or monthly, it doesn't matter. Let's say we are choosing a daily candle. So for the first half of the day and for the first part in the first quarter of the day, which is going to be the Asian session range for a daily candle, it generates liquidity. Now the reason it generates liquidity is because to first of all trap traders, and because if price want to expand or distributes, it must be, it must have, come on, it must have a catalyst or something that it can react off of. So first of all, it generates liquidity above a key level uh, in the first quarter of the candle or the first quarter of the day, which is the Asian session for us. And then after that, we have a manipulation profile, which is in which the liquidity is being purged and the ranging profile is purged. And also along with that, we test a higher time frame key level, and we also purge a CRT, and this manipulation profile happens at a key time. So then when that happens, we form the low or the high of the candle based on the open high low close concept, right? And then after liquidity is manipulated, we now have to neutralize that liquidity, and that happens in the form of price either expanding above or lower, depending upon where the drawn liquidity is, right? Now you know all of this stuff because of the open high low close concept, and you've made all of this narrative based on that, right? Now obviously this isn't going to be the only concept that you're going to use. You're also going to use and integrate concept like intraday profiles and market profiles, right? We know that the market never moves in a straight line or a straight line up or down, right? It always moves in market profiles. First of all, it forms a ranging profile to generate liquidity. We then have a manipulation profile, then expansion, and then even after an expansion happens, we then either turns into a ranging profile or a retracement before we could expand higher or lower towards the drawn liquidity. That's what we call building a narrative. And the reason why it is so important is that you'd never wanna take part while liquidity is being engineered, meaning you'd never want to take part in a range or on a consolidation or an accumulation profile, and your only objective is to only trade during the manipulation profile, meaning when liquidity is being purged at a key time, and after or only when liquidity is being neutralized in the form of either price expanding or distribution and distributing towards the drawn liquidity, right? That's the only profiles that you're going to make sure to trade in, and you're going to make sure you also match it with the correct key time and the correct kill zones, right? And then trade it, and then find your entry model after you match it with a CRT, and then that CRT is purged. You only look for your entry model only after a CRT is purged at a key time, and then after an order block forms, we take a model entry there with our entry, stop loss, and exit pre uh, uh, predetermined and already predefined, right? that's where you're going to look for your model one entry. But if you did not had all of this narrative, and if you didn't had build all of this narrative, then you wouldn't know where you're going to look for your entry model, right? And you would just randomly choose candles and treat them as CRT, and obviously they're not going to work out for you because you haven't built a correct narrative that is needed in order for you to select a CRT correctly. That's the exact reason why I didn't make a chapter on CRT right away, because I know, and we know, and now you know that in order to choose a CRT correctly, you must have all of these concepts. You must have knowledge about all of these concepts, and you must be equipped with proper knowledge about these concepts and how to integrate them with each other before you could actually choose a CRT, right? Choosing a CRT correctly is the easy part, but what's the hard part is building context and narrative behind it. And if you don't know how to build that and how to do that, you're not going to be able to choose a CRT correctly, right? There are a lot of people that keeps asking me in my DMs about how to choose a CRT correctly, right? And obviously I cannot answer them. I can answer them, but I would have to long a long essay about how you need all of these different things before you could actually do it, or before you are actually capable of doing it, right? And that requires learning all of these concepts. That's why I made sure to taught you about market profiles, taught you about the open high low close concept, intraday profiles, weekly profiles, leading ranges, and so on, right? Because those are integral parts of a CRT. And those parts, when they are properly integrated with each other in a logical framework, the way how I've taught you, only then you're going to be able to choose a CRT correctly, right? So now you have an edge over many traders, and that edge is because you are in CPI, and because you've learned from me. You now know this fact that in order to choose a CRT correctly, you must build a narrative, right? And most people on Twitter aren't aware of this. Even if I've told them about this, that you must need narrative, they don't know what narrative is, because they are learning from the wrong sources, right? That aren't teaching them these parts, either because they don't want them to succeed, or either because they don't know anything about it, right? And I think the later one is the most common reason behind it, right? So next time when you are asking someone how to choose a CRT correctly, that's the proper answer behind it, right? If they say anything else like, oh, you need this and that, then they are wrong. The only way to choose a CRT correctly is by building a proper narrative behind it, and you're going to build that narrative through the help of these concepts that I just mentioned earlier, right? So remember that. Now, I've already explained all of them to you, right? I have explained as SMT divergences to you. I've explained the open high low close concept, market profiles, weekly, intraday profiles, everything, right? You know about them all right now, right? So now the next part for me in CPI is going to be to teach you about how to integrate them properly, right? And then I'd make sure to make separate chapters about how to determine drawn liquidity and a step-by-step approach. And then I'd also show you what variables and other factors you're going to involve in, what other variables are you going to use to build a narrative, and what is going to be the step-by-step approach to actually do it, right? So I'd also be making separate chapters about those topics as well. And then in level 4, I'll also be sharing my entry models with you. So after you go through all of those things, you're gonna be one step and even two step ahead of most of the traders, right? Because you'd have the right guidance, you'd have the right knowledge. And even as a beginner, if you think about it, it's the most logical and sound logical and rational theory, right? Most people that talk about CRT and talk about these other stuff, they talk in terms of patterns, and you know that patterns never work, right? The markets are algorithmic, right? Meaning that they follow a specific sequence and a specific rhythm, and the only way you're going to be able to exploit that sequence is if you use a concept and use a framework like the one that I'm teaching you about, which involves all of these concepts and factors, and use it in such an efficient way that you have an edge over the markets. And then the next part for you is going to be to properly have the proper mindset and psychology behind it. And then you need the discipline to follow it consistently, and then over a long period of time and over a long track record of data, this particular framework and this particular edge of yours that you have made will make sure that you always end up being profitable at the end of each month, at the end of each quarter, and that's what is going to matter for you, right? So remember that. Now let's look at the charts and let's see what we got on the weekly time frame that led me to taking this trade, right? So if you remember from the last breakdown, then you would know that I had this weekly FEG as my short-term drawn liquidity before price starts moving higher again, right? And price for the first half of the week was moving lower towards this drawn liquidity. But then what happened is that we had an SMT divergence with DXY. And what happened is that we had non-symmetrical price action between these two correlated pairs and assets, right? And what happened is that DXY filled it and tested the FEG, the weekly FEG, but on EU price never tested the FEG and instead formed a divergence and a discrepancy with DXY. Now, if you have studied the chapter I made on SMT divergence, then you know that this sort of price action is what we call a non-symmetrical price action because price formed and made a discrepancy or a divergence. Now we also know that a non-symmetrical price action or non-symmetrical price indicates that the current order flow that price is in is going to be unable to continue and a reversal is likely going to take place, right? And that's exactly what happened. You can see that after we had this SMT divergence, what happened is that the bearish price action that we were in at the moment toward that we were forming toward the short-term drawn liquidity was unable to continue, and after that we reversed from there until the end of the week, right? Now the thing about SMT divergence is that it stays true and intact for the time being, which means that this SMT divergence worked out perfectly for the rest of the week this week, right? Now when the next week opens, price is going to enter a new cycle, right? And then you'd have to analyze the price action again based on the variables and the frameworks that I've taught you, and then you're going to determine new short-term and long-term drawn liquidity for yourself, right? So because of this SMT divergence, this week I changed my drawn liquidity for the rest of the week after the SMT divergence was formed, and I changed it to a bullish one, right? Because of this SMT divergence. And for the rest of the week till this week's end, till this week's closed, we were moving higher, right? And my drawn liquidity for this particular previous week was correct, right? So my drawn liquidity last week for the rest of the week after this SMT divergence has formed was bullish, right? And on Wednesday I had been looking for bullish trades and bullish CRT on the 4 hour. That's what why my thought process on the higher time frame was, right? Now let's look at the 4 hour time frame to see how I position myself in a CRT there towards the higher time frame drawn liquidity, which was bullish for me, right? So right here on the 4 hour, you can see that we had this SMT with DXY on Tuesday, right? And then we closed higher. So on Wednesday, my expectations were to look for higher prices for the time being for the rest of the week, right? Because of this SMT divergence, because the SMT divergence suggests non-symmetrical price action, and we know that after a non-symmetrical price action or during non-symmetrical market condition, the current order flow is going to be unable to continue and we are likely to reverse from there, and that's exactly what happened, right? Now obviously during Wednesday I couldn't take an entry right away, right? Because that would have been what? Come on, tell me. It would have been pattern trading, right? Which is what you should avoid at all cost and at all times, right? That's why I waited for price till London open zone, right? Meaning I waited for the right time and waited for the ranging profile in the Asian session to end before taking entry, and also waited for a CRT to be formed, and then I matched it with a key level before taking entry on the 15 minute. So during London Open, we basically ranged and found nothing significant, right? And then during London lunch, when this candle was formed, this 4 hour candle was formed, I took this as CRT because this was formed inside a 4 hour FEG, and it also was purged at the key time, which was the London lunch, right, during the 6 a.m. candle. So once it was purged, I started looking for a model 1 entry, right? This is what we call building narrative. I built this narrative through the open high low close concept, right? Because based on their concept, we know that before price expand higher, it opens and then generates liquidity at the first quarter of the candle or the first quarter of the day. And then after that liquidity is being generated or the ranging profile is formed, we then manipulate below that liquidity and purge it, and we manipulate and purge the liquidity, and then with that we also form the low of the candle and test a higher time frame key level and form a CRT, right? So in this case you can see that the low of the day was formed at a key time, which was the London lunch time, right? And also at that time 4 hour CRT was also purged, and we also had tested a 4 hour candle. So you can see everything like perfectly aligned with each other in a logical framework. And after that I waited for the CRT to be purged, and once it was purged it was matching my higher time frame drawn liquidity, and the narrative that I had built was also sharp and clear. And after the model when entry was formed, I took an entry there targeting the higher time frame drawn liquidity, right? This was the trade breakdown.